back, folks, to another episode of Policy and Profits. I'm EJ Antoni, and I'm joined by the one, the only, the great Anthony Esposito. How are you, sir? How's your week been?
EJ, I love the introductions as usual. Thank you. Week's been good. Week has been interesting. Market has been kind of steadying up between this 5450, 5500 level. So we'll get into that in a little bit. How has your week been?
It's
Exciting?
been busy. It's been busy. We've been getting a lot of data. We got labor market data. We got inflation data. That's just on the economic side. Obviously, on the politics side, what a whirlwind it's been. We just had I don't know if we call this the second presidential debate or if we call it the first because it's the first one between these two candidates. But we got that, and then we've had a decent number of market moves as well, including a couple of sell-offs, rebound here and there. So a lot to talk about today.
Absolutely. Absolutely. I'd like to start. Obviously, some people 23 years later remember clearly because they were there. I think it's a day, 9/11, that will live in our nation's history in a very dark corner. And I would just like to put out very proudly, as I wrote in my note today, God bless America. God bless those who love her, who have fought for her, who defend her, and who have given their lives for her. So on 9/11, God bless America. Hard stop.
Amen, Reverend. Couldn't agree more. And I got to say, I'm very glad to see, people, you especially keeping the memory of 9/11 alive. I had to drive by the Pentagon this morning and saw, obviously the memorial service that was going on there. We have a permanent memorial that's been built in New York City, obviously at the site of the towers, memorial built in Pennsylvania as well, where Flight 93 went down. But it was a really it was an almost bizarre, kind of a surreal experience, Anthony, when I was the last class I was teaching on money and banking, when it was 9/11, and I asked for a moment of silence, and all of a sudden it occurred to me, these kids weren't even alive when it happened. And I actually had to stop and take a moment and talk to them about 9/11 and explain to them, like, you guys don't actually know, and it's not their fault or anything, but they had just no idea of what it was like to live through that because of when they were born. And I suppose it was kind of like, the veterans coming home from World War II and having kids and eventually having to tell their kids about Pearl Harbor because they just weren't alive for it. It was an interesting experience, kind of that passing the torch moment on such an important part of American history.
It's amazing. It's a great point. My daughter left for school today, and I don't know how they decide to talk about it, but I do know I'm a native New Yorker. I grew up in Staten Island. I worked at the stock exchange for 17 years before heading to the buy side to, some hedge funds and so on. But was down at the exchange and out on Broad Street and Wall Street, 2 blocks from the towers the day of 9/11. And just to rethink and relive through that day is a real significant memory for me. And then to talk to my daughter, my wife and I were getting her out to school today, and they're going to talk about it in English class. They're going to write a parody on the first picture that came out of an individual jumping from the 100th floor, 90th floor of the first tower. And I said to her exactly, almost verbatim, dropping her off today, that make sure your teacher knows this is not a fictional depiction. This is not a storytelling time. This is a real event. I lost quite a few friends that day, and we lost, as a nation, we lost our soul that day. That was truly, one of the darkest days in our history, and for these kids not to know of it because they weren't born is fine, but it's our responsibility to educate them on how demonic and how evil certain forces and certain nations and certain people are in this world, and that at the end of the day, it really comes down to a battle, and at its core, it's a battle of good and evil. And that day was the epitome of that battle. So I hear you. As we move along, it's like, our grandparents telling us about World War II. This day moves further and further back in history, but it should not be forgotten. So, Moving on to some other items today. I did want to talk to you. I saw your hit this morning on Fox Business on Maria's show, which again was phenomenal, as you always are. And we went into you went into the CPI numbers and then kind of extrapolated out and talked about what that means for the Fed and what that really means as far as what we're seeing. And there was a good conversation about crude oil as well. So CPI came in this morning, month over month number for August, zero point 0.2 versus a zero point 0.2 estimate. Ex food and energy month over month came in zero point 0.3 versus zero point 0.2. And then year over year, 2.5 versus 2.5. And ex food and energy year over year, 3.2 versus 3.2. So numbers basically in line when you take out food and energy, because who pays for food and energy? The price went to, up 10 basis points to zero point 0.3. What are you seeing as far as real price, as far as the real cost of living here, and what do you glean from
Mhm.
these CPI numbers?
Well, I think the biggest thing is that the price decreases that we're seeing, although that's very welcomed relief for consumers, it's not because we have a growing economy where we're bringing all this extra supply online, where we're seeing big productivity gains, where we're seeing efficiency increase, where we're able to get more for the same amount of resources. Instead, when you look at oil, people are choosing to not increase production, but they're actually drawing down stockpiles. And I mean, we're at the point where Cushing, for example, is reaching bottom. They're at incredibly low levels right now. And it's basically because producers are pricing in the hard landing, and it's not just oil. You can see that in a lot of commodities right now. People are really leaning towards the recession end of which possible scenario are we heading towards? Are we going to get that mythical soft landing? It doesn't appear that that's going to be the case, and so because we're anticipating less demand, prices are coming down. But the problem is that it's, again, just these future markets. We're not actually seeing widespread relief for the American consumer. And that's why, as you already said, that core increase is not really moderating all that much. We're still well over 3%. A big part of that does have to do with shelter. And people are, some of the analysts have said, oh, well, the shelter component is lagged. Okay, that's true. It is. But even if you fast forward to today, and you look at home prices, they're still going up and at a faster clip than pre-pandemic, and they're going up faster than the Fed's 2% target. And we're seeing the exact same thing with rents, by the way. It's not just the frozen over home buyers market. It's all housing costs, all shelter costs. And one of the scary things when you look at CPI is that it is just ridiculously, there's no other way to put it, undercounting housing inflation. Part of the reason for that, something we've talked about before, the CPI doesn't even look at home prices. They don't look at interest rates. In other words, the two biggest things that go into your monthly mortgage payment. And that's why if you actually use real world data and you say how much has that monthly mortgage payment increased on a median price home since January of 2021, it has doubled since that point in time. Doubled. Not an exaggeration. It's right about 103%. Conversely, look at the CPI, their proxy for home ownership, it's up about 23%. So, they're only off by what, a factor of four. I mean, it's obscene. But what is that doing to the CPI? It is dragging down the headline number. It's also dragging down the core number. So in reality, inflation is much worse than it appears. And that's bad it's bad anytime, but it's especially bad when you consider over the last 3.5 years, we've basically had about a 20% increase in the cost of living. To think that it's even worse than that, no wonder everyone's so mad about the economy.
Yeah. It definitely shows how policies directly impact our day to day life, and that's a real thing. As far as oil goes, we talked about that, and there's a lot of. I think it's kind of, aside from those focused funds, those dedicated energy funds and energy equity funds, people haven't realized that oil is actually down 20%, over 20% from last October. Not to bring up a horrific event. As we look at geopolitical risks in the Middle East, normally you see oil at least rise or stabilize. It topped out around 82 and a half, kind of a double top in April of this year. And then July of this year, we're down 20% from those levels, even with turmoil in the Middle East. And even with the so-called increased production under the Biden-Harris regime. My question is really, it seems to me, and I'd love to hear your input on this. It seems to me that this is a demand issue. I know that as far as leases handed out, I was reading through some documents the other day. You know, Trump had approved over 4,000 leases under his term, and that's compared to about 400. Don't quote me on the numbers, but give or take around 400 leases under Biden Harris. So clearly, there was more production under Trump. Prices were better under Trump, but it seems to be that we reversed here. That there is an actual lack of demand for oil globally, not just the U.S. Do you agree with that, and do you feel that that's why oil has come in as a component of CPI, or is there something else that you're seeing?
Anthony, I think those are all great points. And on the supply side here at home, you're absolutely right on the leases. The other thing that we have to remember is that to actually get a rig up and running, you need the lease, you also need the permit, and then there's tons of other red tape. So we hear a lot of talking points, and from some of the numbers, it's actually true that that in certain instances you've had more leases or more permits issued by the Biden administration versus the Trump administration. But if you look at everything being greenlit, whether it's the lease, the permit, or the other regulatory requirements, the Trump numbers blow the Biden numbers out of the water. And that's why if you look at not just production, but rig count exploded under Trump and has actually been going down under Biden. Now, fortunately, we've had a lot of efficiency gains the last several years where domestic producers have figured out how to squeeze basically every drop of oil or every cubic foot of natural gas out of a given well. And that's why you've seen production increase even as rig count and employment in those industries has gone down.
Yeah.
Looking at globally, though, we've had a lot of disruptions globally, whether it's in the Middle East or whether it's in Russia, for example, with the war in the Ukraine. And despite that, we have also seen a big drop in demand. And to your point, that has really helped to keep down prices. We forget that the Eurozone is mired in recession. Manufacturing there has just fallen off a cliff, especially in Germany. That has been a huge it has been put a huge amount of downward pressure on global demand and therefore prices. And because it really is a global market, it's not just a matter of how much Americans are driving here at home. It's a matter of how much foreigners are driving, how much industry around the world is using, in those markets. But I would love to know, Anthony, are those trends that you think are going to continue? When you look forward at markets, is that something that you think is going to essentially, as we move from whatever amount of economic growth we have today towards less and less, not just here at home but abroad, are these trends that you see continuing?
It really depends on policy, and it depends on how we come out of what looks like the recession we're heading into. I mean, technically, you can look at oil here at 66 and change on the front month contract, the futures contract. I could easily see oil breaking down a little bit further to 60. There's some support there. I think that that's a legitimate case and a legitimate expectation at this point. It's just been so heavy. It's so under pressure, and that directly back to policy and directly back to economic demand. So I see oil here as very likely heading down based on my model and based on the charts, heading down to 60, and then we'll see what happens there. That should act as some support, just a general support level, long-term support level for the commodity. It's really interesting as we talk about, and I'm going to shift gears here slightly, as we talk about oil, copper used to be the leading indicator, and we used to say that copper was going to actually, would lead you to, or was a leading indicator towards economic strength, industrial production, and so on. It seems like people are more focused on oil here, and you make a good point in saying that it is a demand issue, and I believe it is as well. And then we start to look at the jobs data, and we start to look at the Fed speak. The Fed has only spoken about rates and inflation for years. And now we're starting to talk about it as a main talking point. And now we're talking about the second part of the mandate, which is full employment. The employment issue, the employment status and situation is truly not healthy in the country for a number of underlying reasons. And we've gone through this. Some of which is what kind of jobs are being created. Are they government funded? Are they actual real economy jobs? And part of it is who's getting the jobs. Are Native American born Americans getting the jobs and actually producing and then paying back into the system and being a part of our economy? Or are these jobs being lost to illegal immigrants and non-native born Americans. And whether that hurts anyone's feelings to hear that or not, it's an economic fact that if we're giving these jobs away from American citizens, it's not good for the American economy.
Mm-hmm.
So we talk about a lack of demand in oil and a pressed heavy price in oil, which is clear. And now we're talking about the Fed cutting rates. Previously, the Fed cutting rates was a bullish sign for the market. It was cheaper money. It was more access to capital. There was a way to build your business and invest in your business easier, and you can discount cash flows at a lower rate forward, so you can pay more for stocks essentially, and that's fine. And some inflationary pressure is actually bullish for the market because the market is priced in dollars, and prices will go up as we are an asset-based economy. So the question is, as we see oil coming in based on what we are discussing as a lack of demand, and now we look at the Fed cutting rates, is the Fed rate cut actually a bearish signal here? Is this a sell the news event? Meaning we've rallied the market every time we talk about rate cuts to the point of exhaustion and nausea. And now as the Fed is about to cut, is that actually a bearish signal now? Is that a sell the news? So we have no demand for energy. We have the Fed cutting rates because we have a weakening job market and they need to do something. Don't forget the risk of a spike, a reigniting of inflation with this Fed cut is there. What does this situation look like? And is the Fed actually making a decision based on weakness and not on strength? And is the Fed making a decision that's actually going to lead to is going to lead us into recession with higher inflation? What's your view on it, EJ?
I can't remember the last time the Fed ever made the right decision, quite frankly. And looking at, if we track CPI from 1970s, for example, and we overlay that with CPI today, what we see is that it's kind of eerie how similar those two lines are, and essentially that we look to be repeating the mistakes of the 1970s, where back then, when the Fed was on the brink of success in really bringing down inflation, they took their foot off the brake, put it back on the gas, and we were right off again on the races. And the unfortunate thing was, because the government spending continued, the deficit spending continued, and all of the underlying inflationary pressures in the economy were still there, that made the second spike in inflation even worse than the first one was. And it took back-to-back recessions with Paul Volcker and the 20% interest rate on mortgages, for example, to really kill the beast then after they let it out of the cage the second time. So, no good news there, unfortunately. Looking forward, though, in terms of, should we interpret this as bullish or bearish? It's a great question. The problem is, I think it depends on exactly what we're talking about. So, it's bullish in terms of, I think, asset prices, because you're looking at setting off another round of inflation. And as you pointed out, all these things are priced in dollars. So if you reduce the value of the dollar, you're going to increase the number of dollars it takes to buy all of these things. But in terms of outlook for the economy, I think it's more bearish, because the only way the Fed can get political cover in order to bring down interest rates in today's environment, especially this close to a presidential election, the only way they get political cover for doing that is if they can point to negative economic data. In other words, figures that show the underlying economy is not doing that well. And to do that, I think they'll point to the repeated downward revisions in things like the jobs numbers, the absolute collapse in job openings. I mean, labor demand has just plummeted, especially since its peak in March of 2022. And so all these things together, they're going to say, oh, look at all these signs of economic weakness, some of which are very accurate. And they'll say, therefore, we can cut rates.
Interesting, as always. Super insightful, and I love the way you lay it out. I really do. These are the things. This is the conversation that I find so valuable as we go through the podcast and we break down those headline numbers. We break down those blips on X or blips out in the newspaper, and we can actually talk about what they mean and what they may mean moving forward. Thank you, EJ. You said something there that I agree with 100%. I think a lot of market participants do, that the Fed is, I think you said the Fed is rarely right, or something like that. That the Fed is, let's say the Fed makes some misguided decisions and missteps in the past.
Oh, that's such a
And
charitable way to put it. I
well,
love
thank you. I feel
it.
very charitable today. Um, and they seem poised to do the same now.
Mm,
Um, it's interesting as we're talking about rate cuts, and then there was a big headline yesterday, which I thought was a big headline, and it hit the market quickly. Market kind of bounced, and then that was the end of it. But it'll come back to bite us in the butt. The Fed had cut the biggest bank's capital hike by half in an overhaul yesterday. So Michael Barr made an announcement yesterday in a speech, I believe at the Brookings Institute, that the capital requirements were supposed to be at 19%. There was a 19% capital hike on bank requirements
mm,
coming down the pike. That was cut to 9% now by the Fed. Apparently, there was a lot of lobbying by the financial institutions. There was a lot of pushback, and the Fed has capitulated and actually said, "Well, you'll now need to have less capital on hand in case of a shock than we originally said you would." And I don't know if it's a case where your 5-year-old is kicking and screaming and wants another piece of candy, so you finally capitulate and give it to them. I don't know if the Fed is as truly independent, whether it's the dog wagging the tail or the tail wagging the dog,
mm.
but something here looks like there's a little bit of smoke here, and it almost seems to me like not to be so negative, but or so even keeled. I wouldn't say negative, but even keeled.
Mhm.
Are they reducing those capital requirements because the banks are actually in such good shape they don't need it, or are they reducing those capital requirements because the banks don't have that capital to put up and hence put up a fight to get that capital requirement cut? On the day yesterday, the XLF, which is the most liquid financial ETF, was down 1%. Goldman Sachs down 4.4%. Citigroup down almost 3%, and J.P. Morgan Chase down 5% on that news. So there was definitely some smoke, maybe a little fire. What's your view on this cut on capital requirements? Is this actually bullish? Is this actually the Fed saying, "Hey, you guys are good. We made a mistake. We miscalculated," or is this actually the Fed saying, "You guys don't even have the capital to put up, so we're going to cut this. We're going to make an announcement with Barr, and we're going to exit stage left and hope everyone forgets this headline"?
Great question, Anthony. And unfortunately, again, I think it's a little bit of a mix of both good and bad here. I think you do have some banks which are very healthy and well positioned. I mean, as healthy as they can be in a fractional reserve banking world, where they have sufficient capital requirements, and they're the ones I think who are going to be just fine essentially. But
Mm,
and the reason I say that is because when you reduce capital requirements on these banks, it does allow more opportunities for leverage. And if they're healthy, if they're in good shape, and if they're positioning themselves well, then that's essentially all upside with no downside. But I think behind the scenes here is probably also an attempt to more or less rescue or perhaps pre-rescue, if you will, banks, especially the regionals, the small banks who have nowhere near the capitalization of the JP Morgans, the Wells Fargos, the Bank of Americas of the world. When we look at, for example, the liquidity of these banks, in other words, take their cash assets to total assets on their balance sheets, I mean, it's a world different between the small banks and the large ones. And that's not just a matter of deposits, let's say. Even if you look at cash coverage of deposits, in other words, cash assets versus deposit liabilities, again, the big banks have just a world better cash position there. And so also keep in mind that the bank term funding program, which is now closed, but the loans are still being repaid. There's nearly $100 billion of that needs to be repaid to the Fed. Almost all of it is going to have to come from the small banks who took out those loans. A
mm,
lot of the big banks didn't, and so again, I see a lot more pressure on the small and especially the regional banks here, and because of that, I think lowering these capital requirements was probably a necessity. It's especially worrying that this is happening in the backdrop of the Basel Endgame, the Basel III regulations that are going on right now, where the Fed is essentially trying to figure out how can we boost capital requirements.
mm.
And so the fact that they're walking that back is again very worrisome. Um, in to a certain extent, I'm glad to see it because so much of the Basel III endgame requirements were just totally nonsensical. The
Mhm.
things which the Fed was choosing to raise capital requirements on versus the things they were choosing to leave them alone made absolutely no sense. Just as one example, if you take the whole matrix of requirements, capital requirements that they wanted to impose here, one of the things that it would have done was actually decrease the capital requirements on some very risky mortgages, for example, a la 2005. Whereas if you had people who consistently paid back their credit cards and never carried a balance, those kinds of credit accounts would actually be penalized under these new regulations. So much of it made no sense. From that standpoint, I'm very glad to see the Fed walking it back. But the fact that they're cutting it in half, yeah, that raises some concerns for me. It makes me wonder what is going on behind the curtain. I love the analogy you used of where there's smoke, there's fire here. But one thing I would love to know, Anthony, in terms of Island Capital, how do you position yourself, or how do you respond when you get these decisions from the Fed, right? When the Fed is reducing capital requirements, or even going back to what we were talking about earlier, how does a 50 basis point cut versus a 25 basis point cut factor into your decision making there on the profit side of this whole equation?
Yeah, it's a good. Well, thank you very much for the lead in. We at Island Capital, first of all, we don't trade financials per se. The portfolio is broken out into four sectors: basic materials, industrials, utilities, and energy. And we trade top down S&P, realizing those trades in the S&P front month futures, the E-minis, or in the SPY ETF, depending on how I want to slice and dice or what our tax consequences are going to be for the trade.
Mm.
Um, so we run a technical program here. And what I do is I compare price action to my own momentum and trend indicators. When they line up, and this sounds so basic, and it kind of is at this point, um, or I've been doing it for so long, it feels basic. When they line up as positive, it's a positive call, and we're long stock with discretion. I don't want to present the portfolio as a quant. It is not a straight quant. It is a rule based portfolio with discretion. So they line up positive. I get a positive signal. I lean long stock. We can shift to a flat line, which would be neutral, and then we can shift to a negative, which is a negative signal, and I would lean short stock. Along with that model, I do run some pattern recognition on the S&P and on individual names and sectors. Take everything into account, and I come out to where I want to stand. A lot of times, it's very interesting. The picture will show you exactly what people are thinking. The picture will show you, regardless of the headline, regardless of what everyone's saying on TV, regardless of the talking heads and the talking points, and where people put their money, where somebody bought, where somebody sold, is key to all technical analysis,
Mm.
and it is key to mine as well. So as we head into the next FOMC meeting, I am watching my model. My model has had a very nice positive call, and I write a morning newsletter, which is out on my website, islandcapitalinvestments.com. You can sign up there to get it, or you can go on exit at CMT_Anthony. We had a great call out from the August 5th bottom up towards the top at 56.50. I noticed there was a solid resistance line there at 650, 650 in the S&P. We went neutral. We thus went short. And now that short has turned into a neutral call, which I believe today is going to close in another negative call. We went neutral to negative and now back to negative. So to answer your question, I'm conscious of and paying attention to all of the inputs, all the data points, all the headlines, earnings reports, the Fed, geopolitical risk, whatever the case may be, price of commodities, copper, gold, crude. But at the end of the day, I'm watching my model and I'm watching what price and internals, underlyings look like for the S&P. And because I have a rule-based strategy, because I have a strategy that I've run for almost 2 decades now, I've been trading for almost 28 years. I know how it acts. It's kind of like, your best friend, when they're going to, or in my case, my wife, I know when she's going to, pick up another drink. I know when she's going to say, hey, let's take a jump in the pool. I know when she's going to say, hey, we got to get to the store. We need milk and eggs. Like, we kind of share in the brain at that point. Me and the model I consider my model to be my best work friend. And I can kind of see what people are thinking just based on where they put their money. It's that simple. So as we head into the FOMC meeting, I don't see, and my model's not ticking in a positive bullish setup right now. We've made some money down from the 56.50 recent high in late August. We made some money up from the August lows. And right now I'm neutral to negative as we move into today, getting short again, to be perfectly honest with you, as we speak. That's why I keep flipping over to my right to check my right screen. Um, I want to see how people act based on the upcoming news and then the news event, not
Hmm.
necessarily what the media and what the talking heads are saying. People should be doing. I want to see what people are doing, and what people do with their money is is the ultimate in their conviction. That's where they're either buying or selling, and that's all I'm reading. So conscious of the FOMC meeting coming up, conscious of these changes in requirements, conscious of the CPI report. I love it all. I watch it all. I love the volatility. That's a great place to make money. But in the end of the day, I don't care what people say should happen. What I care about is what is happening, and on balance, predict what will happen because I'm here to make money, and that's the bottom line.
I think it's so great that it's not a straight quant. I mean, that's is it true that those things can really perform well when the market's moving steadily in one direction? Sure. Look at what happened with long-term capital management, where they had blowout returns, and everyone was wondering how the heck are these people doing it. And then as soon as the market started to shift directions, it was the classic case of the market can stay irrational longer than you can stay solvent. And it blew up spectacularly, turned into the first too big to fail bailout run by the Fed.
Yeah.
So it's amazing how I guess, Anthony, without that little bit of human discretion that is oh so important, that you can really get yourself into a remarkable amount of trouble. And then if you can actually add in that human perspective, but keep it rational, keep it rules based, it's amazing how successful you can be with that.
Yeah, absolutely. And honestly, a lot of a straight quant, and I've worked with a ton, and the one of the very large hedge funds that I worked with previously, there was no emotion in most of the portfolio. It was straight quant. It was rule based. We ran our model, and every day the trades went on or came off. The key to the discretion is the experience that I bring to the table, and I say that very modestly. The emotion could actually spin you out of the trades where the model is telling you are good, and you just don't think they are good, or you think they shouldn't be good, or you had a fight with your buddy at Monday Night Football the day before, and you're mad, and then you make a bad decision. So I think the discretion is great, and the ability to make a call within the model and understand I have seen this 1,000 times. I'm okay missing the opportunity. I'm not okay taking a dumb bet and losing money. And
Hmm.
that's where my experience comes in with the model. So definitely, for me, it's the right mix. There are quants that are successful. There are quants that are successful until they're not. Kind of like picking up pennies in front of a steamroller. You can make your millions over the course of 5 years, and then you lose twice that over the course of 2 days. So it's a double-edged sword. Everyone can find their niche and succeed. And the beautiful thing about the market is it is survival of the fittest. If you're not making money, you will not be in business. And that really is the bottom line. But thank you, EJ. I really appreciate the time today. I appreciate the questions on the profit side of it and the fun side of it. Um, I know we're pushing a little long today, but I just have to ask you, the debate last night, President Trump, Kamala Harris on stage, a lot of different opinions of what happened and why it happened and how it happened. What's your take on the debate overall, and what's your take heading into November? Because this is a data point that's going to be obviously affect the markets and something that's going to affect our lives in a very real way.
Hmm. It was painful, quite frankly. Like if I had to give you just a single word, it was painful. And frankly, I just don't think it moved the needle for anybody. I mean, there are so many people who are firmly in the Trump camp or firmly in the Harris camp, and they're not going to move. And the folks in the middle, they heard literally nothing new. They basically heard the same facts that President Trump has told before, and they've heard, I hate to say it, but the same lies that Harris has told before. And the fact that it essentially turned into a 3-on-1 debate where the so-called moderators just kept fact checking Trump, which is basically just another way of saying that they took the time to interject their own opinions and made no attempt to correct any of the flat out lies told by Harris when she repeated things like the very fine people hoax, which, I mean, there's literally video evidence for that shows that Trump did not actually say what she has accused him of saying. And despite the fact that there, again, being literal video evidence, apparently nobody cares. Apparently it doesn't matter. We heard very little in terms of policy last night. There was one question, I think, on the economy. There were virtually no questions about the pertaining to the cost of living crisis right now. There were no questions at all about the exploding deficit, the fact that interest on the debt is very quickly consuming all of the personal income tax revenue in this country. I mean, it was just it was obscene from an economic standpoint. And again, unfortunately, I just don't think the whole thing moved the needle very much at all in terms of an election outcome. What were your thoughts on it, Anthony?
I actually, in watching the debate, and I'm a very large fan of and supporter of President Trump for many reasons, most of which is he's a true leader and he is effective. And that's a hard stop. It was a debate where he was fact checked, and fact checked incorrectly, by the way, by the moderators, which was really insane. She was not fact checked. She perpetuated lies throughout the debate. I think the president has so much on his plate and has done so much against all odds. They have been attacking this man for 8 years. I think that the average American, every American, should ask themselves why. Why has he been attacked since he came down the elevator and then took office and then improved everyone's life across the board? Fact. That's not an opinion. That's a fact. Why have they continued to lie, to attack him, to weaponize the judicial system? There's been an assassination attempt on his life, which the media has dismissed as a broken television screen or just stopped talking about it. Like, this man has so much on his plate that I think when he gets up and he finally has a chance to speak about policy, to speak about performance, to speak about the lies that are coming from the left, there is so much to say that he's trying to say it all at the same time. And I don't blame him. I really don't. He is an effective leader. He was an effective president. Hopefully he will get another opportunity, another 4 years to be that effective president. Life was better under Trump. Inflation was lower. The economy was stronger. Everybody was in a better position. The border was more secure. Fact, the border was more secure. Border crossings were at the lowest in the past 25, 30 years, or actually since we kept those statistics, versus at their highest levels now coming into the end of the Biden Harris White House. There's just, it would be, I can sum it up in one sentence and then we can wrap it because I know you are a very busy man. I would say,
like you're doing nothing all day.
if you've seen My Cousin Vinny, in the end, he's in court and Joe Pesci stands up and he's supposed to rebut the prosecutor's argument. And he says, everything that guy said is bullshit.
Everything that guy just said is bullshit. Thank you.
I think that if President Trump just said that simply, everything that this lady said is bullshit, I think it would have summed up the entire night, because it was all bullshit. It was lies. It was spin. And to be perfectly honest, everything they accuse President Trump of doing, which is really standard MO, everything they accuse him of doing is exactly what they do. So if you want to know what Kamala Harris and Biden and the Clintons and Obama and the Soroses are doing, just listen to what they accuse us of doing or Trump of doing or their enemies are doing. Whatever they accuse Trump of doing is exactly what they're doing. And that is standard operating procedure. My opinion of the debate was, as yours, it doesn't move the needle. Americans know what their life is like now, and they know what their life was like under President Trump. And you might not want him, if I'd be happy with him in my wedding party, but you might not want him in your wedding party, as one of the CNN list audience members gave at the end. You might not want him to be your neighbor. You might not want to go golfing with him. But I'll tell you what, with all we face as a nation, domestically, internationally, economically, security-wise, with all we face, he's my man. You don't have to come over for a barbecue, like Trump said in the town hall. You don't have to like me, but you're going to have to vote for me. And I think that is the standing quote of the day.
Anthony, incredibly well said. Great wrap. Thanks again. I think it was a great episode. Thank you, everyone, for listening to us on Policy and Profits. Hope you guys have a great week. Anthony, we'll talk to you soon.
Thank you, sir. Talk soon.